Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Lisa Lippman. She is an agent, the top agent at Brown Harris Stevens for the past 6 years. And we're going to take a look at, does the real estate market, is it correlated with the stock market? Lisa, it is great to have you with us in studio. Welcome to Trade Talks.
Thank you. Great to be here.
We hear so much in financial media about rising interest rates, supply chain constraints within real estate. Is the real estate market a direct reflection of what's happening in the stock market?
Typically, the real estate market is greatly affected by the stock market, especially the New York City real estate market, which, as I'm sure you know, is very different than the rest of the country. We're usually first to go up, we're usually first to go down, and we do follow the stock market. Historically, the real estate market followed the stock market continuously. It didn't follow it in 1987, but from there on, until about 2016, it did follow the stock market. From 2016 to 2019, we had sort of a strange time where the stock market was on fire and the real estate market in New York City started to soften. That was the first time since 1987 that it did not follow.
That's interesting. Is it because affordability, or is there any reason you can connect it to?
My only thought about it is at some point in end of 2016, we probably had just gotten so high in the real estate market that there was no more room for it to go. Also, inventory really built up, and the complete transparency of all transactions, both present and past, had come into part of what the real estate market was about in New York City. Previous to about 2010, we had very little transparency. By 2016, we had a lot of transparency. Buyers were able to see what everything had traded for in the past, what things were trading for in the present, and also how long things had been on the market. And that combined with increased inventory really changed the dynamic.
So for high net worth buyers that's buying $4 million and above, are they impacted by interest rates?
They are impacted by interest rates. I would say it's more of a mental thing than anything else. Financially, they're probably not impacted that much. If you're spending more than $4 million on a home, hopefully you're not relying too much on that last dollar per month. But emotionally, it does make a difference. When money is very inexpensive, people are tempted to spend more and leverage more.
Yeah. Well, why not just rent if you're in the upper echelon?
Well, that's a really good question, but it's somewhat easily answered. Number one, we have very little, very large apartments. For instance, I have a few clients now looking for larger than 4-bedroom homes. It's almost impossible to find something to rent like that. Sometimes you can get a townhouse. Sometimes you can get a condo that somebody is having a hard time selling or doesn't want to sell, and you can rent that. Very few rental buildings have apartments larger than 4 bedrooms. And then what happens is not only can you not find something, it tends not to be half as nice as what you'd want to purchase. So if somebody's really able to spend quite a bit of money, they choose to, what they want is typically going to be something they can purchase and not something that they can rent.
Right. Well, they're going to also want those customized fixtures that come
Correct.
along with that $4 million plus price tag.
Correct.
What about the $4 million and under market in New York City?
That has been greatly affected by the interest rates because every rise in interest rates by a point affects the buying power of those purchasers. And it can really be the difference of being able to spend $2 million or $3 million. And unfortunately, the real estate market does not adjust as quickly as interest rates go up. So you would hope that things would be so efficient that if interest rates went up about 2%, like they did for buyers right now, that prices would go down exactly that amount so that buyers' spending power would stay the same because that would keep the market going. We had a really, really busy market until the interest rates went up about 2 months ago and the stock market went down. And things really slowed down because the combination of people's portfolios being less and people feeling poorer and the fact that people were going to have to pay higher interest rates really put a brake on many buyers, both emotionally and in reality. And the real estate market does not adjust, prices don't adjust that quickly.
Well, we know outside of the New York City market and other high net worth markets that it's the issue of supply as well.
Correct.
People aren't selling because they're nervous they're not going to be able to find something to buy. Do they want to buy at higher interest rates? They might have perhaps had lower interest rates in their old home. Are you seeing the same thing here in New York City in terms of supply? And what portion of the market is the most busy? Is it that 1 to 3 million? What range is that?
Yeah, so good question. We have had very low supply, very low inventory for a couple of years. Since the market opened back up in about January, February 2021, when we had the vaccines coming into New York and people were sort of ready to go out and about and purchase, and people were moving back to New York. People who had thought that they were going to leave decided to stay here and buy bigger homes. Since that point, we've had super low inventory, and it has never picked up. So despite the fact that things have slowed down in terms of people wanting to purchase, we still have low inventory because a lot of sellers who are only going to be sellers at a higher price point have also decided not to sell. So we have super low inventory. That is continuing to keep our market very fueled. I would say probably the busiest price point is between $2 and $4 million. That is the moderately wealthy in New York City. That is the person working on Wall Street at a law firm, professional person buying a 3 to maybe 4 bedroom apartment. And we still have super, super low inventory in that price point. And if you put something good on the market in that price point, it sells immediately.
All right. New York City, always its own unique marketplace,
yes,
isn't
it is.
All right, Lisa, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.